attendees are in listen-only mode.
Good afternoon, everybody. Stan and Jack here, and we're doing Ask Us, which is a subscriber Q&A session designed really to talk about anything you want to talk about. It can be a question about the service that we do. It can be a question about maybe something we post on Twitter that you don't understand, or it can be a question about a specific instrument, like what's happening with bonds right now. Whatever is on your mind today. We try to do this once a month. We had to cancel yesterday. I had an appointment with the tax man, unfortunately, so and that went better than expected, thank God. So I appreciate your patience in terms of me being able to reschedule this to today. And Jack, I guess what I'd like to do is just remind everybody, because I don't know that everybody knows this. I haven't really put this out on our private Twitter feed.
Yep.
We are offering this week, July 4th, a special for annual subscriptions. So if you are interested in an annual subscription, now is the time. And we're looking at the end of this month, hopefully, to raise prices. So if you're an original subscriber who has been with us since the beginning, your rates are guaranteed for life, okay? So we will maintain our pricing with you, and the new subscribers after the end of this month will be looking at different pricing than you are right now. So this is an offer that we're doing just before we raise prices, just so you guys can benefit from it, because we appreciate your subscription. So you can find that on the subscription page. I won't get into any more details than that. So it's basically a 30% off kind of a situation. So look at that for Chart Chat and for the daily video and for the triple play. So with that said, Jack, let's get to questions, I guess. Anything else you want to add?
No, I don't think so.
Okay. First question, David. It's about ZB. What are your thoughts on an ending diagonal forming? Seems that this is a pattern that has been forming on topping patterns. Absolutely, David. It's a very common pattern. You want to address that, Jack?
Yeah, I think let's, shall I pull up the charts for it? I think if you're looking at the ZB chart, I'm going to concede to calling it ZB just because obviously everyone else is actually...
Hold on a second. Let me get the chart up here, Jack. That way you can at least refer to mine, or do you have a chart ready?
No. You can see an ending diagonal type pattern on here.
Okay.
Yes. And I think it's almost ready to roll. But it's just teasing. It's finishing off a band ride. You know, they finish when they finish. It's not made any serious headway in days. You know, you got 1703, then we got 1711 last night, and Stan's got a target at 7723. It could tag that too. So none of these are substantial breaks up. I think this is likely to be the topping area. My only concern is on the daily chart. I don't really have any good divergence, but it's so overbought you don't really need any. I think I've got an open sell signal on the 60-minute that hit. First time we hit 177, we haven't actually gone up significantly since. I think this is all likely to be topping action. Unfortunately, we had a beautiful double top set up in place. It went down, broke the neckline briefly on ZB today, and then came all the way back. So it needs another retest of the high. I put that on the bonus chart today. And that's what we're saying.
An ending diagonal, just let me talk to you about this. And David, I think you probably see something here that many people maybe don't see or don't understand. An ending diagonal, typically you have a long first wave. So you can look at the 5-wave structure here up, and I'm calling this an ABC because I use a 3-wave method, if you will. Okay, so 3 waves up is 174.19. We are definitely in that area. We're through that area. But bottom line is 961 ticks, that's your first wave, right? Second wave is 828 ticks. The third wave has to be less than 828 ticks. That's what a contracting ending diagonal looks like, okay? And I think that's what David's referring to. So if I were to put a maximum on this, okay, let me put the maximum on this. If I were going to put 828 ticks, we have to come in less than 828 ticks, close enough for government work. That's all the way up here at 185. Okay, so you know a contracting diagonal. That's what it typically looks like, and it usually draws out like a wedge. Okay, so on a daily basis, this is a contracting diagonal. A long first wave, shorter third wave, shortest fifth wave. Okay, so and that's one way. That's certainly a valid way to interpret this, David. Absolutely. The only thing I want to say is this: we could be in in my three-wave methodology. Okay, we could have one last little spurt up to 177.23. That was our original target. We got to 177.09, I think, or something like that. Look at the divergence here, guys. It's just absolutely gorgeous. Look at the price cycle here. It ended already. Okay, so I don't know. I like this short. That's all I'm going to say. And I am short, and I'm being patient. So, and by the way, I just want to say one thing about this. Have we seen a lower high? Yes. Well, yeah, kind of we have. And so maybe you're stopped out at this point. That's one way to trade this and wait for the next lower high. But, at this point in time, I'm light. I'm 1/3 my normal size, okay? When I see the lower high, I'm going to add, okay? When I see 177.23, I will definitely add. So, I think at this point in time, you don't bet the farm on this. Can we see higher prices? Yeah. Will you have a chance to add higher? Yeah. So just keep that all in mind, guys. I don't want anybody getting hurt if we see 180s, and just keep that in mind. So
one thing I'd say in terms of resistance is that I've been saying on the monthly chart, on the TLT monthly chart, the one I've been showing on Chart Chat for quite a while now, I was showing resistance, the main pattern resistance at 142. Obviously, we're through it. We are overthrowing the megaphone. I think that's very likely to be a bearish overthrow. How far that goes? Well, the next trend line I had up, I've got in approximately the 151 area now. And that is the current rising channel that was established a few weeks ago now. No, several months ago now, actually. Sorry. It's, that's the rising channel I've been showing on that chart for a while, and that's at 151. It's not going up terribly fast. Could we reach it? Yeah, we could. But as Stan said, for the technicals on the ending diagonal, this goes as high as 185. I don't think it's going to. I think it's there are pretty good odds, looking at it, that it's going to finish sometime in somewhere in the 177s. And I'm already short.
Yeah.
But if it doesn't, fair enough. It's going to be a regroup and reshort from higher, depending on what happens. I think in terms of how much further it can go, I'd be very surprised to see it break that channel resistance. Very surprised.
Yep.
And that's at 151. It's not moving very fast. That's actually not that far away now.
Now you're talking about TLT, right?
Yep, TLT.
Yep. Okay, so TLT right there. 142s, we're still in the box. We're right on our entry date, by the way, of 7/8. 7/8's the beginning of the high window. The center date of the high window is 7/12. So, guys, next week is the center week for the high-end bonds. So, sometimes we're early in the window, sometimes we're late, sometimes we're spot on the date. So, there's no when you're looking at daily cycles, there's no exact timing. We know that there's a 5-day window here, so that's really about it. Okay, so with that said, David has another question. Can you discuss the skew and overbought tools? And he has parentheses VIX. You have comments about that, Jack? The VIX or the skew? I'm going to pull up my.
I don't really use either. For overbought and oversold, I generally just use RSI and occasionally have a look at MACD.
Okay, let's take a look at the skew. And what I'm going to do is, by the way, there's an article on the blog. You can go and see it, and it's about the skew index. Okay, now, the skew index helps to predict outsized returns on the S&P 500 because what the skew is, it's basically how much money is out of the money in options. When you see large bets being made outside of the money, outside of the in-the-money range, if you will, for options. If you start seeing outsized bets in the options world, the skew index gets up into here. And when it gets up into here above 145, that is the sell level, 15%, okay? This is the documentation on the skew. You can go look it up yourself. But basically above this area is where people start predicting black swan events, okay? This is a great example, what we just experienced, which was, we were all the way up here in the 153s, and we had a limit down day, which was just a reaction day to the whole Brexit thing. But and we had this a similar situation here back in October. So, it is not something you can day trade. Okay, this is something that gives you a sense that the options world is askew. Okay, that's all it is. And so, you get wild reactions off of a high skew index reading. Okay, now sometimes they're delayed a day or two, but you usually do get larger moves. Okay, and that is just partially because the options world is askew, and by the way, the big players see that and they take advantage of that. Okay, so that's my thing on the skew. Overbought tools, VIX. David, do you have a specific question about the VIX itself? I'll ask you that question. And let me show you my overbought tool, David. Right here it is. Okay, it's called Bollinger Bandwidth. I use an 18.2. I have a blue line here set at 20. When we hit 20, okay, and you can go back into history and you can look at it. Here's 20. Here's 20. We are so overbought at this point in time, and the bands are so narrow. Okay, the Bollinger Bandwidth is so narrow that typically, usually within a few weeks, we have an expansion. You can see it here. Here's the low. Here's an expansion. Here's the low, here's an expansion. Now that's me because I'm a swing trader. Now there are other methodologies that people use with the VIX, okay? And I'm not a big VIX fan, but I do trade volatility at times, okay? Now right here, I'm just going to tell you, we are approaching this lower band area. Anytime we're near the lower band, you have a fairly good opportunity to squeeze higher. The only other thing I want to say about the lower band for me is an 18.2 setting, okay, on the VIX. You penetrate that lower band at an 18.2 setting, and we close below that lower band, just look out, because history has proven that not 100% of the time, but probably 70% of the time, it tends to lead to an expansion within a week or so. And the VIX for me is not a short-term indicator. Okay, it is a medium-term indicator because, frankly, it's a 90-day it's a 90-day formula. Okay, so it's not a short-term formula. So that's kind of how I use the VIX, and just to share that with you. Okay, Danny has a question. I think, Jack, this is for you. Is it unlikely we will get a pullback on the S&P 500 to the 2050 area now? Are there any more low windows coming? What's your sense of that, Jack? Do you have a S&P chart?
I think in low windows, that's a question for you. I think in terms of what are the odds of getting back to 2050, I'll have a much better idea after I run the charts of the weekend. But I think the setup to go back to 2050 that we had as a possibility this morning is dead. That pretty much died when the flags broke up. I don't think we're going to see a retracement to 2050 before we reach the flag targets, and that is a full retest of the all-time high on SPX, but also on the Russell 2000, the target's the retest of the 1190 high. And got about halfway there today, but only halfway there. There's another half to come.
Okay.
How much are we going to retrace before then? If we were to do the retracement on Monday, and we might well do the retracement on Monday, I can certainly see a move back to retest 2100 or 2110. I'm not sure we'll get much below it.
I'm opening up my cycles now, so it'll take me a minute to answer the cycle question. But I want you to look at my chart, and I want you to look at the 1.618. I assume everybody can see my chart, right? 2075. I believe that we are in a flat here. Okay, so I mentioned that the possibility that we're in a flat earlier, and I want you to look at the divergence setup here on the 1 hour basis. I have a sense, guys, this is a 3 up right into the 25 area. I have a sense that we are in a flat. A flat would measure an ABC down to 75. So if you are short this market, I think you're going to get some relief early next week. But I am no longer looking for this to go all the way down to 1950. I'm looking at monthly pivot support down to roughly 75. Okay, so that's if somebody is holding on to a short, that's something that you might want to consider as an exit area. Now on the cycles, I'm opening cycles now, and I haven't run these given today's rally. Okay, so you just need to keep that in mind, and the cycles do adjust. But we are in a high window now. We have been in a high window, and this is a 40-week high window in the S&Ps. And I have, let me give you cycle low windows. Okay, I have a cycle low window at the beginning of September. okay, fairly significant cycle low window. It could be a little early into August, okay, but I have a cycle low window in early September, and it is not a small window. It's a significant level. I have another cycle low window in December, which is kind of surprising. Also in November, a smaller one in November, like around mid-November or so. And by the way, that will shift around a week or two, that far out. And in December, I have a larger window, okay, a larger low window, okay. So we could be basically putting in a summer grind higher, okay, which is something I mentioned on the daily update. If we break the 21.15 area on ES, the 21.13 area, we could be into a summer grind higher. So this is a flat formation, which is a reversal pattern. So the idea here is very basic. We would do like a 75 sort of thing, and then we would go higher. Okay, I don't believe that we're going to get through 34, 36. Okay, and I think you guys probably remember the monthly chart, and I have on the monthly chart here the 618 of this previous decline, the decline down into 2009. And Jack and I spoke about this for about 6 months, okay, when we were putting in this contracting ending diagonal here in 2015. 2138 is a brick wall as far as I'm concerned. We could just do a double top, guys, and turn. Just you need to keep that in mind, and that's what Jack is saying.
Because there is something else to consider here. We've been seeing some big spikes up, big spikes down. One thing that we need to remember is the January barometer stats, the version I run, that I published, 1st February this year, and first trading day of February this year, and first trading day of February last year. I basically said the best case scenario for the historically for the year was going to be flat. And the stats for last year were great. The historical stats for last year were really good. But the January barometer, I said flat at best, and it was flat on the year.
Yeah, I believe you're right.
Yeah, the stats for this year are rubbish. Presidential years do not do well. You on best the mediocre performers. At worst, they're utter disaster areas. I'd mentioned 2000, 2008. They aren't good. The historical, and I had exactly the same January barometer stat trigger again this year. I'm not expecting a big ramp up. When we're getting comments like, it appears the bears are dead, the bears are not dead.
No, they're not.
We're going to see a fair amount of two-way. It may be that we get long moves one way and long moves the other, but they're likely to be fast and they're likely to be fairly violent.
Yeah.
We are not done with the downside this year.
Oh, I agree with that. I agree with that fully. Yeah, absolutely. And I think we're in a very, very strange market right now. Okay, you got to look at the Europeans, you got to look at what the DAX is doing, and you got to look at what the Nikkei is doing. Okay, and I saw a very interesting tweet that somebody put out, which I think it's like the DAX is down 20+%, the Nikkei is down 20+%, and the U.S. indexes basically are near all-time highs. Okay, so there's something here that isn't really adding up, and this balloon is gonna unwind, and when it unwinds, it's not going to be pleasant. And I'm looking here at something else also that I just want to mention. You got to pay attention to the upper Bollinger Band here. Okay, so the upper Bollinger Band is right at the 36 to 38 area. Okay, it's 36.75 right now. So 38 on the
anything there. There's quite a lot of resistance there.
Yep, absolutely. So I think that was the answer to the question, Danny. So I hope that helps you in terms of cycle low windows, etc. If you're caught short, again, I would go into the shorter term chart. Well, first of all, breaking an area like breaking a previous high, that's a reason to get out. So breaking 13s here on the S&P or breaking 15s on ES, that is an invalidation area. Okay, so hopefully you're not caught short, but if you are, I never recommend capitulating at a high. Okay, you're going to get a chance to take some off. That chance is going to come early next week. Okay, David has a follow-up question. So the market was skewed long. David, what you would have to do is you'd have to go in and look at options, and I would go in and look at spiders and see how the spiders are skewed. the spider options, that is, and try to understand that. The market gets skewed both ways. Typically in a grind-up market, if we're grinding higher, typically that is when the skew gets really high in a grinding market, that's a signal for a big-time short. Okay, I think what we've had here with this Brexit thing is we've had such volatility that the market has been skewed short and the market has been skewed long. So, the shorts just kicked the shit out of the longs, and then when we got to the third standard deviation Bollinger Band, when we had that limit down day, the bulls kicked the shit out of all the shorts. So, I think the market, people look at where's all the money, and the big players, they take advantage of where the money is. If the market's heavy short, you can expect to squeeze long, and vice versa. So I still think we're experiencing that right now. Okay, so
yeah, I think we are.
Yep.
I did say also on my blog a number of times that I really didn't see the Brexit as anything more than a sentiment thing in terms of the market, particularly in terms of the U.S. markets. I really didn't see it was going to have a significant impact when the dust had settled, and the dust settled faster than I expected.
Yep.
But I mean, really, this has just been about sentiment on Brexit. It's not really about economic fundamentals or anything really that matters much.
I agree. I agree fully. I think Brexit is more of a fear thing than it is anything else, because nothing really has changed yet, and I think it's going to take years for something to change. Now, I think the other thing to keep in mind is watching headlines, because if Italy or France or another European country says something about exiting the euro, I think you're going to see bigger fireworks than what we have just seen. So
I think unlike Brexit, that would actually be genuine news. That could mean that the process of the dissolution of the euro is actually starting.
Yeah,
that's new.
Yeah,
that would be news in a way that Brexit isn't.
Yeah.
And part of the fear on Brexit was that it would lead one of the euro countries to want their own referendum and to arrange it. If that happened, that would indeed be news.
Yep, I agree with that fully. I think that is something we have to watch out for. So, if you are long this market, I would caution you to make sure you have an emergency stop somewhere. Okay, just do that, because you could wake up one morning and we could be limit down, and it could happen that fast, and it could happen in the wee hours of the morning when Europe opens. So just keep that in mind. Okay.
Pretty much all that has to happen for that to happen would be for Italy to decide they wanted a referendum.
That's it. That's the news headline. And by the way, when that headline hits in Italy, I'll be sleeping. So just manage your account appropriately, guys. I have a question for everybody here. How many of you got into the oil trade, the triangle short that we had? Anybody out there? Just curious. It was, and the thing I want to say, guys, is that when we see a triangle setup, it's something for you to pay attention to. It was a great setup, and there are different setups that we look at, and the only reason why I'm mentioning this one is when you see a triangle and when you see Jack or I talking about a triangle, okay? Now, sometimes triangles are a bitch to call in terms of which direction they're going to break, okay? But this triangle set up just beautifully, perfectly. We got to thrust. We're not done with the thrust yet. We're in a back test now, but I'm still expecting like 40-50, okay? So, this is a very traditional triangle thrust. Look at the back test. It went right to triangle support, 3 waves up, right to triangle support, right to $46. I think we're on our way back down now at this point in time. So, we were looking at this as a first target. That's why it's marked. I think we're going to go through that first target. We're definitely going to see the 40-50 area. So, I guess what I'm trying to point out is there's certain setups on this service that are probably, Jack, in my opinion, probably better setups than others. Yeah, right, exactly, David. Better than others, right. David has a follow-up question. Which instruments trade technically better than others? What's your perspective on that, Jack?
Bonds is a very good technical instrument. Of all the indices, of the 3 main indices we follow, I would rank Russell 2000 first, then SPX, then NDX. NDX is often a bit of a mess. RUT generally trades very technically. So, I mean, there's a lot of variation between instruments. I think the sometimes they go through cycles. I mean, something like NG, we're having a lot of very nice moves, lovely technical moves, but sometimes even a technical instrument will go through a period where it just chops around and does almost nothing. Coffee's done that for quite a while. NG did that for, we were talking about it in Chart Chat.
Yeah,
it was just boring to watch for about, what was that, 9 months, 6 months?
Yeah, it was in a triangle.
Yeah. Sometimes that happens, and then it breaks out, and then you've got movement and you've got volatility again. So but there are a lot of very nice technical instruments. I think my least favorite's probably NQ. I'll rarely give an opinion without looking at the others.
Yeah, I think that soy, for example, is not a good technical instrument. I think that the grains sometimes are okay, but it depends upon the cycle that you're in. So for me, the best technical trade is when you're in a trend. Okay, so when you're how can I say this? When we're in oil and we're getting a triangle, or we're in oil and we see an inverted head and shoulders, or we see a definitive pattern, okay, in oil or even natural gas, energies trade very well with patterns, okay? ES, on the other hand, I think does not trade as well as energies, okay? And I agree with Jack. TF is a far better instrument to trade than any other index, in my opinion. Now, the other sleeper that a lot of people don't trade at all is the Nikkei. The Nikkei is a good technical instrument. I have enjoyed trading
and actually,
the Nikkei.
That extends to the yen.
Yeah.
Very much so.
Currencies is a different world in terms of technical setups, and I think you have to be far more gifted technically to trade currencies. I think it's a more difficult trade than energies, for example. And I think a lot of this has to do with style. David, I think it has to do with your technical style, what you like to watch for, what setups work for you, and what you look for. And commodities, trading commodities, actually, I think it's a lot of fun because you see certain technical setups like triangles, and you get moves. You get very profitable moves, and they tend to be fairly quick and decisive.
And one of those, actually, just to come back to bonds for a moment, of course, you've got to remember, on bonds, we are in a triangle thrust.
Yes, we are.
They're
right.
in two triangles. The second triangle was part of the first triangle thrust. Yeah. And that will all come back. We're in a triangle thrust since TLT was at 119.
Yep.
And when that thrust finishes, it's going to retrace all of it.
Yeah.
But the thrust can be a little difficult to identify exactly where it's going to finish, but very, very high confidence it's coming back.
Here is the triangle that he's talking about right here. Okay, here's the W. Here's the A, B, C, D, E. Here's your X. And this is a triangle thrust, the entire move. So, it'll be interesting to see how this resolves itself. And if you look at a triangle, sometimes you can get lucky with a triangle. And sometimes it's just a three-wave move. And this three-wave move says 142.79, which is where we are right now. So, even the triangle move says we're done. Even the looking at the shorter term five-wave structure here, the WX, YX, Z, says we're done at 142.59. So we have a convergence here of fibs, et cetera, and time. We have a price and time convergence right here. So you gotta lean short here at this point with bonds, in my opinion.
Yep, I agree.
Yep. Okay. Other questions? Anybody else have any other questions? Good questions, guys. Jack, anything else you want to cover while we're here?
Yeah, just to come back to something you were saying. I actually just ran the multi-time frame charts on wheat, corn, and soy, and I agree entirely. None of them are really good technical instruments. Not in the way that, for instance, David, live cattle, that is a good technical instrument.
Oh, yeah.
It really is.
Live cattle, LE, if anybody trades live cattle, it's fixing to put in a bottom right now. Yeah. David has a question about overthrows, Jack. I think this is you. When you get an overthrow, do you lean for a reversal?
Yes, I do. Having said that, you always need to be aware. I mean, I was mentioning on the CL chart today, for instance, this is a bullish overthrow unless the wedge is breaking down. They do break down 30% of the time. And if the wedge breaks down, the target is, I'd actually have the target on that in about 38 area. And I've got other support in the 38 area. If it breaks down, it could go there. It's only a little past Stan's 40-50 target. And that is the other side to bear in mind on it. If we were doing that, then the chances are we'd be putting in the right shoulder on an IHS, and I have an ideal target in that area for the right shoulder low.
If I look at a very, very long-term chart of bonds, okay, we are in an overthrow now, okay?
Yeah, we are.
And so, do you lean short here? Yeah. And here's the thing you got to remember. If you're in an overthrow, are you at the lower high? Your risk goes way down at a lower high. If you're entering now in bonds, you got to enter small. Okay, you got to enter smaller because we haven't seen a definitive lower high yet. We're just now. Have we come off the daily band ride, Jack, on TLT?
On TLT, we didn't hit the upper band today.
Okay, so
I'd need a bit more movement before I could say we were definitely coming off.
Yeah.
But it didn't hit the band today. It spent the whole day underneath it.
Yeah, I want to see a break of 141.70 on TLT. That will signify to me that we're definitely putting in a lower high should happen after we break that level.
There's an open gap down to about 140.7. When that fills, it should be done.
Yeah. Notice the huge swings in ZS. Yes, soy has big swings. And by the way, those big swings do not trade as well as other instruments technically.
No, because, corn and wheat is very, very tempting to go in and be looking for a low at the moment. I couldn't find a good way of doing that.
Yeah, wheat has more to go to the downside.
Yeah. No, but the reality is on some instruments you can see very clearly where the low area is likely to be. I can see that on.
It would be tough to see. I agree.
Yeah. That's a reason to be cautious with it.
Yep. Agree. Okay, guys. Any other questions? Jack, I think this might be a wrap.
I think that's a wrap, mate.
All right. Guys, a pleasure as always. We're going to do these once a month. You guys have any other questions, put them out on the Twitter feed. We're happy to deal with any questions you have. And Jack, thanks very much. I'm sorry, go ahead.
One very last point, David. I had the wrong email address, so I've been sending if you're not receiving something from me, I send you something every week. If you've not received it, get in touch with me on the Monday. But yeah, I started using the other index to track it. I'll post you the updates on all of them this weekend.
All right, guys. Have a great weekend, everybody. Take care.
All right.
All right. Pleasure. Take care, Jack. Bye-bye.